If, like myself, you don't reside in the US and have questioned the value of trading the micro NASDAQ outside of its typically more liquid hours, then keep watching as I guide you through a robust setup that regularly occurs during the London Open. It normally happens between 3 a.m. and 4 a.m. Eastern Standard Time. So if you're in London or early afternoon, sort of on the Asian side of the world, or like me in South Africa, Central African time, then this is a great strategy you can take or try to trade during that time window. What I basically like to do is I either like trading the micro NASDAQ, the micro ES, or you could as well trade just the emini NASDAQ and ES if you wanted to. So the first things you want to do is go and mark out using vertical lines the 3 a.m. and 4 a.m. timestamps. I hope you guys can see that. 3 a.m. and 4 a.m. All right, I've got that marked with these vertical blue lines. All right, so this is actually an early morning setup that occurred this morning. It just goes to show how really well this works. Okay, I've also got a few of our Ninjacators indicators on the two lower panels here in NinjaTrader, which really helps as well to confirm whether I should get into a trade or not. Alright, so you can see that price was pretty flat, trading a bit sideways in a bit of a rangy sort of market. As price then entered into the time window that I'm looking for a specific trade setup, you can see there was a little bit of momentum divergence, automatically picked up by our momentum divergence indicator. So that's one thing I want to see. I want to see that during this little move to the downside, that momentum's been drying up. So that's the first thing I want to see. Really cool. Then I want to see a shift in price structure. You can see that we had a nice move almost, I think it was on the 5 minutes past 3 a.m. mark to the upside that broke a previous market structure. So that indicates to me there was potential shift from a bearish sort of move, although price was mostly sideways, to a bullish move to the upside. So that's the second thing I want to see. And also very importantly, I have my volume delta histogram from Ninjacators, which tells me whether the buyers and sellers for any particular candle is in charge. So when you see these red sort of towers, or should I say, we also call them histograms, it shows that, let's say for example, during this candle there was a lot of sellers involved here, more so than buyers. And as price then moved into a low, those sellers start drying up. Price then start moving back to the upside again, and slowly more and more buyers got involved. Price then start moving down to the downside. Little bit of sellers, little bit of buyers, so a little bit of indecision, and then that candle that broke that previous market structure appeared with a lot of increase in buying pressure. So that's another thing I want to see. Three things I want to see: basically momentum divergence, break of market structure, and an increase in volume during a break of that previous market structure. And then simply to find a trade location, I look for what is called a fair value gap. If you guys are familiar with that, it's basically a 3 candlestick pattern where basically during a downtrend, let me just show you an example if I can find one. That's a good one over here, where you see a candle moving to the downside, you see a secondary candle move to the downside, and then your third candle's high should basically not overlap with your first candle of that formation's low, which creates what is called a little fair value gap right over there. So these can appear all over the place. There's another one over here. To give an example, in the bullish move to the upside, price makes an upwards move, upwards move, upwards move. In this case, the third candle of that formation's low doesn't overlap with the high of the first candle, right? Creating again fair value gap. Now there are different names for these. Different traders will call it different names. And then some traders will tell you it's got to be 3 candles in a row for a bullish scenario, or 3 candles for a bearish scenario, a red candle, sorry. In my opinion, I just want to get in. Obviously, I've got all of these conditions in my favor. If I don't see these conditions from my indicators appear, I don't trade. So what I've got here is an actual red candle, a strong bullish move at one that came in with a lot of volume. That's very important again for me. After divergence, break a previous market structure, and then we have the third candle. Also not a green candle, right? But between the high of this candle and the low of the third candle in that sequence, we got a gap created by this middle candle of this 3 candle pattern that was accompanied by volume. Very important again, that volume I want to see with that break. I don't see that, no trades on. What happens? Price pulls back into the fair value gap and then continues to the upside. Now, you'll see these types of setups occur over and over and over again during the time window. Again, can happen on the micro NASDAQ, the micro ES, or the mini ES and the mini NASDAQ during the time window of 3 a.m. and 4 a.m. But sometimes you won't get a fair value gap, and so be it. Move on to the next day. So a really nice little setup. Again, very, very important that you use, in my opinion, additional indicators. Like I've used here the momentum divergence indicator that automatically plot divergence over there, as well as, in my case, the volume delta histogram, which showed me that buyers were actually starting to push price higher, break a previous market structure, a fair value gap, price pulled into it. And for those who want to know how you then enter, you basically wait for price to either reach the top of the fair value gap, in this case if you want to go long, and you can place a buy limit order right there, and your stop loss will generally go below the most recent swing low. In this case it's about 33 ticks, and I quite often want to see at least a 1 to 2 risk reward ratio towards a previous high. Well, then put my first target. In this case, if the setup occurred prior to breaking or moving towards a previous high, or obviously you can go for 1 to 3, 1 to 4 ratio, whatever the case might be. So I'm not really talking too much about the actual trade management part of things, but mostly the actual setup and what I look for. All right, so go see if you can spot these on your charts between the 3 a.m. and the 4 a.m. Time mark on Mondays to Fridays, and see if you can see those fair value gaps, materialize. Also, like I mentioned, very important that you got some sort of supporting indicators. In my case, especially volume is very important, and momentum divergence at those areas with a break of market structure, all those things falling in place, then you got really a high probability trade setup setting up. Right, so I hope you enjoyed. Again, if you want to see how this can also work during the early morning session in the US, more particularly between the 9 a.m. and 11 a.m. mark in the morning during the US session, like I mentioned, then please like and subscribe, hit that notification bell, and then during one of my next videos I'll show you how that sets up during that time frame for the folks that live in the US and that can't trade this setup during that 1 hour allocated time. Right, thanks for watching. If you want to know a bit more about all of these indicators I've shown you, then please make sure to click on the link in the description. We got a fast track Ninjacators fast track program running at the moment, where you can get your hands on these indicators and most of our indicators in the Ninjacators ecosphere. So make sure you click on those links, and I'll see you in the next one. Take care and goodbye.